Hello, everyone. Today we have the absolute pleasure of being joined by Lance Tate, the president of Tate Development and Investment. Lance, how are you doing today?
Doing great, Harris. Thanks for having me on. I appreciate it.
No problem at all. The pleasure is all mine to have you on the podcast. We're really excited to have you on to talk of all things business, all things investment. So excited to get straight into it.
Absolutely.
Perfect. So, Lance, if you could start off by telling us a little bit about yourself, your journey, where it all started, and how you got to the position you're in today.
Sure. Yeah. Well, I grew up in a real estate family. My dad was a developer. I joked that I knew how to calculate a cap rate before I knew how to throw a baseball, which doesn't make you real popular as a kid, but it's paying off in the long term. But yeah, so I went to USC after high school. I grew up in the Bay Area and tried to go down a film writing route for a while. And yeah, I mean, I still love writing, but the safety and predictability of pursuing a real estate career just seemed more like the more sound decision long term. Unfortunately, those film writing credits didn't translate to the business school. So I transferred to UOP in Stockton, California, and was introduced to the Central Valley, which is actually where I started my career. So after high school, I took a job with a real estate syndicator in Roseville, California. And they were, at that time, my job was acquisition. So I was cold calling apartment owners trying to find value add apartment opportunities. This is 2001, 2002. A great group of guys. In fact, my original boss, a gentleman by the name of Tom Colon, is still someone I consider a mentor today. And feel very fortunate to have been introduced to the business through him. He made it evident that you could be a really good person and be successful in the business. And I don't think I knew it at the ripe old age of 21 or 22 at the time, but it's a lesson that really carried throughout my career. So I was there for about a year. Unfortunately, they were shifting their focus to retail assets, and that just wasn't where I was focused. So I wanted a little change of pace. First, I was living in Roseville, California, which is a great place to live with a family. As a single 22-year-old, not so great. And so I knew I wanted to make a shift. And so I started putting feelers out for another opportunity. I found one in Phoenix, Arizona. And this was right in 2002, right where the housing boom was really taking off. And one of our strategies was to repurpose mobile home park assets for single family homes. And there was a theory behind it. So the Real Estate Investment Trust over the previous 10 years to 2002, 2003, had absolutely gutted the Arizona mobile home park industry. They acquired a lot of assets and they started raising rents along the way. Well, in Arizona, especially in these 55 and older parks, these people that are on retirement income can't afford these large jumps in space rent. So you had massive vacancy and massive defaults in areas and properties that were really well located. And so our strategy was to help these people. We were doing mobile home park brokerage, but in addition to that, we wanted to help these people grab some value from their property. And so we started re-entitling these properties for them to sell the projects to home builders. So we did that from about 2003 to 2005. A few things were in the mix there. I mean, it was really a successful play for us, but the problem was you were starting to see home builders become a little. And so they just didn't want to pay that spread to us anymore. So they started kind of stepping into our shoes. But the beauty of that experience was I realized that I liked development a lot more than I liked brokerage. I think personality-wise, and just built better for development than brokerage. So I relocated to Southern California and I started a development consulting firm in Temecula, in 2000. That's not true. I took a year off, and it was the worst thing possible for a young kid with a little bit of money in his pocket. So in 2006, I moved to San Diego and then started a development consulting firm in Temecula, California. And that's really where I developed my chops for entitlements, understanding the massive value you can create with not a lot of dollars, but just a lot of expertise. And we did that up until 2009 when the world stopped. The great financial crisis happened. Temecula was one of those emblematic boom bust markets. You'd seen a meteoric rise across all asset classes. And, I remember we had a couple of office projects and we were re-underwriting them almost every 72 hours as we got data on leases that were getting done or defaults that were happening. And so we had to have a conversation with a lot of our clients that, look, you got to stop paying us. We can't move forward with these projects. And so, I saw the writing on the wall. And as I was communicating with a lot of my network in the Bay Area, the Bay Area is one of those really interesting markets. It's just so resilient to any kind of financial blips or financial movements. You'll have slowdowns, but very rarely do you have just massive kind of value losses, especially in the residential space. And so I moved back to the Bay Area. I started a small foreclosure fund. So buying foreclosure properties at the courthouse steps. We were doing fix and flips. And then we kind of realized that there are larger margins in doing a full-blown home rebuilds. That market recovered so fast. And as we're doing this, I was introduced to another gentleman who had worked for Colony Capital, which is now Digital Bridge, and he introduced me to institutional capital. And so at that point, I started developing on my own account. We did two large projects in the Bay Area, along with a 52 residential subdivisions. So we did a 57-unit subdivision in Hayward, another 23-unit subdivision. And then we did two large projects. The first was 777 West Middlefield, Mountain View, where we acquired a 208-unit apartment building for 145 million. Total capitalization was about 165 million, and we entitled that for 716 units. And in concert with that, we acquired the Stevens Creek project, and we entitled that for 489 units and 300,000 square feet of office. And so I kind of furthered my experience with large scale land entitlement, but also got introduced to institutional capital and capital raising. And so that was, an invaluable lesson there. So we did that up until about 2015, and then started a small fund for doing industrial outdoor storage assets. So RV and boat storage, and then what we call iOS storage. So basically we're building parking lots that we rented the space out to. A great experience. Just when interest rate shifts started happening in 22, capital partners who were great capital partners, but they wanted to dial back their risk a little bit. And so that's when I went back to consulting. That was kind of Tate Development Investment's been around forever, but my business is split between Tate Development Investment and Tate Advisors. So I'd say 80% of my business is development consulting or investment consulting, specializing in a lot of projects in California that leverage state laws, SB 330 Builders Remedy. We're looking at a couple projects under SB 1123, even looking at some affordable projects under some of the other state laws that are there. So that's been what the bulk of my experience has been since 2020, 2021 has been my focus. And I have two projects on my own account where we're developing 540 units in the island of Guam, which is U.S. territory. And then I have about 1,000-unit subdivision that we're entitling in Hollister, California.
Oh, yeah. Interesting. And a question I had is, what part of that journey, the whole experience, did you enjoy the most? And what areas of that journey did you actually learn the most and actually helped you with your development within business and obviously entrepreneurship?
Yeah. I'm a believer that not a lot of lessons come from successes, that most of your lessons come from failures. And I wouldn't call these projects failures, but there was major turbulence throughout that process from, Stevens Creek and Mountain View. From the time we acquired the project to the time we got the entitlements done, construction costs in the Bay Area moved about 57%. Which huge movement. And when you're depending on an entitlement liquidation event or liquidity event, it's really difficult when your margins are blown out of the water like that. So it opened my eyes to, first of all, looking at risk management strategies throughout the process. And not that we didn't do that before, but you really have to consider all those things that can happen. That's the only certainty in real estate development. I don't care how good the project is, there's going to be major turbulence. People kind of ask me what I do for a living, and it asked me to explain the real estate development kind of process. And I said, look, if you have a W-2 job, you go from your W-2 job to your house, and you have, you take your money home with you. If you're a real estate developer, you go from your job to your home, but along the way, people are trying to steal from you constantly. It's either be cities, construction costs, not steal from you, but there's just a lot of challenges in the industry. There's a reason that not a lot of people do this. It's particularly in California, I guess I'm a glutton for punishment. It's probably one of the most difficult entitlement processes in the world, I would argue. Being aware, kind of eliminating blind spots through that process was really valuable to me. Not that, understanding who your capital partners are. But the biggest thing from this was just learning to be resilient on the fly. I was sitting in a round table the other day, and someone was talking about a resiliency quotient as one of like the measures for potential partners or investors. And in this business, I mean, more than expertise, more than work ethic, resilience is just the most important factor that you can have in your toolbox of characteristics.
Absolutely,
So I
very
would
well.
say that was the biggest lesson. You got to be prepared to be resilient.
Absolutely. And Lars, what does your day-to-day look like now within, both different companies? Is it a mix of strategy and business growth? Are you very much focused on the future? Are you still working within the team and working on processes and things like that? Or are you working on marketing front, getting the name out there? What takes up the most of your day? And if you can walk us through what a typical day looks like for yourself?
Sure. Yeah. Yeah. Well, I have 4 kids. So usually we're up in the morning and bright and early, get them ready for school and out the door. I start my day at about 8:30. Typically, I try to get my standing calls with the various clients and teams set up around 9 so that they're out of the way so we can go execute the rest of the day. The bulk of my days are execution. I do take typically Tuesdays or Wednesdays. I have about 2 hours for what I call like systems, really heavy on Asana, which we just started incorporating into our project management services. But yeah, I mean, the bulk of the day right now is execution. I have 9 projects. It's just me. I have a team of consultants. But that anything that I can automate, I'm a big fan of automation. One of the tools that have become really valuable is some of these AI responders for emails. I would say on a daily basis get, I don't know, 200 emails that are non-spam emails. And so, just being able to respond to things quickly on things that don't require a lot of my mental bandwidth.
Yeah.
Yeah, that's a big challenge. I do a little bit of marketing, but not a lot. And part of it is I'm up against what I would call my bandwidth right now.
Yeah.
But I am starting to look at partnership opportunities. In fact, I have a call today. Partnership opportunities to expand my ability to take on more projects and add areas of expertise that I don't necessarily. I'm not an architect. I'm not a civil engineer. So looking for ways to bring some of those services not in house, but to make a more comprehensive offering to the development community or people that need our services.
That's great. Thank you very much for that, Lance. Now, I guess coming on to the next topic where you wanted to dive into was industry trends. So what are some major trends or shifts in the industry you're seeing within, the industry, the market? And do you think they're going towards a positive direction, or do you think perhaps they're leaning towards a negative direction? What's your overall take on how things are progressing over the next few months and years?
Yeah, it's a great question. It's really interesting. We have good market dynamics. Now you've seen a flattening of rents, but in the areas where I develop, and by the way, 90% of what I do is residential. I'm very focused on residential ground up and value add. Well, rents are good. There's still demand, inflation. The out migration from California is, in my opinion, is wildly overstated. So that's good. The problem we have is costs. Construction costs are so problematic. And that's why you're not seeing a lot of projects come out of the ground right now. And we still have demand. We still have a massive housing crisis from an affordability standpoint. So we're really trying to find ways to make development more efficient. And so I've really started to focus in on modular construction. In
Okay.
fact, our project in Guam is going to be completely modular. 85% of the project, we're structuring it so that the only parts that we're going to actually have to construct in the island, which there's a lack of skilled labor on the island because of the military buildup, is the civil work. So paving, landscape, grading, utility connections. Everything else is going to be completely prefab and shipped, probably from China, maybe some areas of Vietnam. We're still working through that strategy. I believe that is the solution in California for not only for cost, but just speed. I mean, when you have a 9 or 10% construction loan interest rate, speed can kill you if you don't execute fast enough. We're looking at Guam's the perfect example. We're talking about a 7-story grade level structure that if you built it typically or traditionally, it would take you probably 36 months. We think from groundbreaking to certificate of occupancy, we can be done in maybe 16 to 18 months. So you're literally cutting the process in half and addressing costs in a way that just really makes a lot of sense for the bottom lines. So that's really, I do think that we're going to see some improvement in interest rates over the next 12 to 24 months. And it's my hope, but I've stopped trying to be a crystal ball reader for that for years ago. I don't think we're ever going to get that in the sevens would be my guess, or sixes, maybe if we're really lucky, mid fives. So, that's kind of if I'm pressed to make a prediction, that's my prediction. But I think growth and demand is going to stay very strong.
Amazing. Yeah, that was my follow-up question. What kind of demand and what kind of feedback are you getting from obviously the solutions in terms of modular and the different approaches you're looking to take? Are you getting a positive response? Is there sort of more strength and more, demand for that? Or perhaps are you getting some pushback, or are you sort of getting some, perhaps barriers in terms of regulation, in terms of compliance? How are you sort of seeing the trend being adapted and, accepted?
Yeah, I mean, on the compliance side, it's been more widely accepted from
Okay.
jurisdictions. Where I've seen pushback is it's relatively new. So, there are some clients or some investment groups that aren't comfortable with it.
Yeah.
But overall, I think we're going to be forced to start considering this as the strategy going forward. So, I mean, I'm overly optimistic about it. And the nice thing about it is we're seeing solutions for multifamily, but also for sale and kind of the hybrid in between, which is the sweetheart of residential asset classes right now, which what we call build to rent. I think you're going to see a lot more renters by choice in this market. It's probably the best qualified renters market we've ever seen. And part of it's because of interest rates. Where I'm located in Del Mar, California. I mean, the cost to rent versus the cost to own, there's almost like a 50 or 60% delta. And that's pretty prevalent across the state. So, I think targeting build to rent or some form of hybrid approaches to this is really a sound strategy, sound investment strategy. Yeah. I am targeting for a sale product too. And I think that market's always going to be there. Just got to be really aware of where your price point's going to land.
Very well said, Lance. Thank you for that. Something I wanted to discuss and get your take on was obviously a big trend that's blown up in the past, 10, 15 years, and it's only going to be even bigger, is obviously social media. Power of social media, power of branding, power of marketing through different social media platforms. Now, how big of an impact does social media and that sort of branding space make an impact on the success of the business? How do you see the business integrating and, using the power of social media? What kind of impact do you think that's going to make on the longevity of the business?
Yeah, well, I'll say from a marketing perspective, it's incredibly valuable. Print ads and kind of the traditional marketing for sale product, for rent product. I think social media is really an untapped resource. You can really create a curated story about your community and a more intimate story that you can't do in on an apartments.com ad or print, definitely not a print ad. I mean, I tend to wonder why anyone does print anymore. I just, people like a story, and to articulate that story, you have this free media that gives you this gigantic audience. So I think it's going to be the tip of the spear for a lot of marketing efforts for projects going forward. As far as my business goes, I mean, look, it's an untapped resource. I do some posting on LinkedIn, mostly for customer facing projects. But, the problem is there's just so many people in the space. And so, I think if you're going to, this is only my opinion, and I'm by no means a social media expert, but if you're going to do it, I feel like you have to have a very clear strategy for how you're going to do it, how you're going to attract eyeballs, how you're going to differentiate yourself. Because on social media, the one negative is someone can come on there and act as if they have 20, 25 years of experience. And there's not a lot of ways for people to vet it. And so, you really have to be thoughtful about how you're going to position yourself and how you're going to compete with, we call them nurus that are in the space. So it's challenging, but I think it's incredibly valuable if you can do it correctly. The one piece of advice I would give is if, the greatest asset we have is time. If you're going to do it, hire someone that has expertise in it so that you expedite your learning curve, and if you're going to spend dollars, you're not spending dollars, uselessly.
Amazing.
Yeah.
Very well said. I guess following on to that, in regards to, the noise in the market and obviously people coming in, what's one thing or a few factors that have actually allowed yourself to stand out and actually navigate through the noise and actually stand out as a market leader? And, what is something that you pride yourselves on? And actually that is our top priority in terms of delivering that. Is it customer service? Is it quality of build? Is it, what is the one thing that actually puts you above the rest?
I have, like I said, I have a 20 25 years, I guess now, years of experience in this, but I also have a lifetime of experience I saw growing up in the business. I saw, by the time I was 10, I saw two major market corrections. So really being an advisor and not a yes man is really where I think my value is for clients, and my value as a partner. And just really being brutally honest through the process of where the pitfalls might be, where I think decisions are being made that are either kind of short-term thinking versus long-term thinking. That's really where I shine. Execution, obviously. I mean, I've been doing entitlements forever. And the other thing is humility. I can't tell you how many guys seem like they have it all figured out. I learn something new in this business literally every day. And to think that everything is just a fatal flaw, because things are changing constantly. New state laws, new regulations, new building topologies. You really have to stay humble and curious. And so bringing that kind of fearless consulting, fearless advisory with the experience and with this humility and this curiosity, I think is what really sets me apart. I will not take on a project if I don't think that there's a clear path. And I guess that's the other thing, integrity. So yeah, I mean, I would say those are kind of the pillars of what I try to provide in my business, both as a consultant and as a partner.
Amazing. Appreciate that. And if we can now hone in more business focus and sort of narrow down within the business, what are some stuff that is working really well for the business and you're going strength from strength? And what are some areas of the business where you're perhaps having some challenges and some problems that you're looking to overcome?
Yeah. I mean, I think the biggest challenge is adoption of new strategies. Like you said, at the partner level, we have an 11-unit project in Los Gatos, California, the town I grew up in. And, there's a lot of drive to build this traditionally. I think there's a tremendous amount of savings to be had by going with a modular product. So, I think adoption at the developer level, I kind of go through market data as often as I can to try and find comps of prefab or modular product just to see if there's any deterioration in value. And so far, it seems like the consumer doesn't really care or isn't as concerned about it. So I guess adoption would be the big problem. The other issue is just navigating through regulations in California. I would love at a state level for them to start implementing like streamlining processes for jurisdictional decision making. Really, every jurisdiction we go into, they have a different approach for requirements for planning. They have a different approach for how they treat affordable housing. It would be great. And I know everyone panics when you start talking about taking controls out of the hands of local jurisdictions. But the bottom line is they haven't been good custodians of delivering product. And at some point, we have to put the crisis over ego. In California, it's a crisis. I mean, we lost a lot of friends out of the area because affordability just wasn't there was no product affordable to them that really fit their needs, where you didn't have a 2-hour commute daily. And you're talking about pretty high income earners. So, those are the things that I think are the biggest strategy, the biggest struggles. Capital too. I mean, I think you're going to start seeing more capital come back to the market. But, I don't blame capital for taking a more cautious approach right now. It's, we just can't adopt these pie in the sky underwritings and these really aggressive rent escalations. So until we kind of come up with a more friendly capital source for the developer and for equity, I think that's going to be a challenge going forward.
Oh yeah, that makes sense. And what are some areas that are going really well? What's your strengths? What are some ways that are actually helping drive the business forward? What are some areas that you think this is really what's helping driving the business forward?
Yeah, well, for starters, like developers are we're really like coaches / on-field coaches. So choosing the right team is absolutely critical. And I've been very fortunate. Over the 20 years, I've developed really good relationships with a team of civils, a team of architects, a team of environmental consultants. That has been probably my biggest success, is keeping these teams together and just continuing to execute with them, because I know that they're going to take an ownership view, even though they're consultants. They're going to take a long-term view. And just that building that trust is so cool.
Very well said. Appreciate that. Thank you, Lance. Now, if we can talk about the future, right? What does the future look like for the business, for yourself? What are some goals that have been put on the vision board? What does the next 6 to 12 months look like for yourself? Is it metric based? Is it results based? Where do you want to be in the next 6 to 12 months?
Yeah, it's more results based. I have two projects that I want to get in the ground over the next 12 months. But really, I'd like to shift back. Like I said, my business is about 80% consulting right now and 20% development.
Yeah.
I'd like to move that ratio more to 50-50. So developing a network of capital partners that would be partners as opposed to clients. But yeah, I mean, really, I'm trying to become an evangelist for modular solutions, and that is really a space where I want to become a voice in the real estate space, and not just for my own projects, but I mean, the housing crisis is very real. Guam is the perfect microcosm of it. In the Bay Area, where we saw friends leave, they're moving to Arizona, Texas, Idaho. The problem with Guam, if you leave Guam, you're moving a 17-hour flight away. I mean, maybe if you're lucky, you move to Hawaii. So I mean, you're really seeing disruption to communities, and that's really something that we want to fix. I look at Guam like a testing ground for this. How quickly can we add units? How quickly can we alleviate pressure on the existing housing supply and keep communities intact? So that's I would say, yeah, getting projects finished and a few more projects from my own account, and then really growing the consulting business around modular housing.
Amazing. That's great to hear. And I guess, I put you on the spot. What is one major challenge, if you could solve it today, be it within the business, be it personal, within compliance or regulation, within the industry as well? What is one major problem you wish you could solve, and what would that be?
Yeah, I'd love if there were 3 of me. That would be really helpful. No, I think, again, the biggest challenge is navigating jurisdictional processes, entitlements. So if we could come up with some sort of streamlining process, that would just mitigate so many issues: capital requirements, timing, unpredictability of timing, carrying costs for owners that have debt on the property. That's our biggest challenge, is just figuring out ways to mitigate those process, to mitigate the timing of those processes.
Yeah.
And that's why leveraging state laws becomes so important to me, because those laws, they're flawed, but they're there. It's a move in the right direction. How do we leverage them to make this process more streamlined?
Thank you for that. Very well said. And I guess if we can finish up on, what is the biggest piece of advice you've learned the hard way, or the biggest piece of advice you wish you knew when you started your journey, that somebody would hear and actually change their perspective on, their journey to entrepreneurship and becoming successful?
Yeah. So one of my favorite books is Ego is the Enemy. In this business, you cannot have an ego. It has so many levels to it. One, you have to be curious and you have to be humble enough to ask questions and be willing to say, I don't know, because there's a lot of times you're not going to know. I say, I don't know a lot, and I just go find the information. The other component of it is your network is your superpower, and long-term relationships, in my opinion, don't thrive when you have ego-driven dynamics in it. You have to be willing to give, have to be willing to capitulate in some of these relationships. So yeah, I mean, tremendously valuable. And I would say the last one is, don't have an ego so big that you're afraid to ask for help. I missed so many opportunities early on in my career because I was just too big for my britches and didn't want to ask for help. And I believe that my career would have had a very different trajectory had I been able to be vulnerable. And this applies to, not just professional relationships, but personal relationships. That vulnerability is, it's incredibly important. And people respond to that. People want to help other people, they really do. So be willing to ask for help.
Amazing. Very well said. Well, Lance, thank you very, very much. I really enjoyed the podcast. I found a lot of value. I'm sure everyone listening will find a lot of value. Thank you for deep diving into your background, your journey, and it's made an amazing podcast. So thank you very much.
Really appreciate the invite. I really enjoyed myself. Thank you very much.
No problem. I'm sure everyone, thank you for everyone who has tuned in, and I'm sure everyone has enjoyed